This is Bloomberg Crypto, a daily Bloomberg iHeart podcast.
And I'm Philip Lagerkranser, in today for Stacey Marie Ishmael. It's Friday, November 11th. Okay, today on the show, we were going to discuss Bitcoin's performance over the past year from its high point of about $69,000 to its lows, falling below $17,000 early this week after the equivalent of an earthquake jolted the world of digital assets. Binance, the world's largest cryptocurrency exchange, had announced plans to buy out its big rival FTX, which was reportedly facing a liquidity crisis and appeared to be on the verge of collapse. But now that deal is apparently off, and that's caused a lot more mayhem and turmoil in already battered cryptocurrency markets. I've called up senior editor Anna Irrera so that we can go over just what happened here. So, what's happening now? U.S. regulators are looking into this. The deal is dead because Binance pulled out, and now Sam Bankman-Fried has sent a major warning out to investors. Could you talk us through this a little bit, Anna? Let's start with the authorities in the U.S. probing FTX.
We had a scoop on Thursday revealing that U.S. authorities, including the Securities and Exchange Commission, were looking at FTX potentially because essentially they could have been using customer funds in ways that they shouldn't. And then on top of it all, basically we heard that Bankman-Fried told his investors that he'd messed up. So, it's kind of all up in the air now. There's going to be no bailout. And here we're talking about one of the biggest crypto firms, crypto exchanges. So the potential for contagion is massive. And if it's anything like Terra Luna, it could we could see those effects rippling through the crypto industry for quite a while because it takes a bit for positions to unwind and so forth. So we're going to start seeing, which firms were exposed. And, Sam Bankman-Fried kind of ominously said to his investors, according to our story, that, if he doesn't get help, they might have to file for bankruptcy.
Yeah, and I think it bears sort of recapping for the listeners. One of the biggest crypto exchanges in the world, a name that up until just this week was a blue chip name in crypto, might now have to file for bankruptcy, and they have a shortfall of as much as $8 billion. That sort of, it's hard to overstate the gravity of that situation, huh?
Yeah, I mean, if you're one of our listeners, you will have heard this name so many times on this podcast before.
Matt also interviewed Sam Bankman-Fried, SBF, as he's known.
Sam Bankman-Fried.
When Sam Bankman-Fried said...
Sam Bankman-Fried.
And probably in this context, it might be quite shocking. Maybe you even have your money on FTX, right? And withdrawals have been frozen. And, if there's no bailout, who knows who will get their money back and how much of that money will be given back. So even other bigger firms are in the same position, which is why I was talking about potential contagion, because if you can't get your money back, what if you owe someone else money and so forth? And, it's kind of infinite. So Sam Bankman-Fried told his investors he'd messed up and he was asking for a rescue. He said he would be incredibly grateful if investors could help him. And so if they can't, then, his firm might not make it. And the consequences could be quite dire for everybody who has money on them and the firms that are connected. So it is very serious. It's, the latest in implosions in this crypto winter, but I think it sort of overshadows all the other ones we've had so far. And as Phil, you were saying, it's partly because we've seen this person over the summer appearing as the white knight, saving everyone else. So that while that was happening, he might have also been in trouble is quite interesting. And it shows, again, the extent to which this industry, while it says it is all about transparency, it's quite still opaque. There's lack of regulation because in many cases it is regulation in finance that brings transparency, right? Because it says you have to tell us what you own and where it is custodied and what your reserves are. We always talk about these firms as exchanges, and I've had sources and market structure people tell me, you shouldn't call these exchanges because they're just trading platforms. Exchanges are regulated. They have rules that say how many reserves you must have, when and how. Customer funds should be segregated. So, I guess it's all coming to the forefront now, the lack of regulation and so forth.
And now, as you said, you don't know. I mean, they call an exchange. They're not really an exchange. A blue chip name has just sort of said that, very realistically, we might not make it. Who can you trust in this environment? There must be just this pervasive sense of mistrust throughout the entire cryptosphere right now, huh?
For sure. I mean, in our line of work, we've been speaking to many of these players often, our reporters, ourselves. So already in that sense, it come quite as a shock. But imagine if they were your counterparty and you were speaking to them like 2 days ago and doing a trade with them, and all of a sudden you figure out that maybe they were insolvent. That will probably be shocking. And again, it calls into question risk management practices. And I think we'll see who survives will kind of probably, some of it might be luck if you didn't have exposure in that moment, but maybe you were just being a bit more cautious. And one thing, having sort of covered crypto for a while, is that these exchange collapses are quite cyclical. It happens. It's happened before. But, I guess crypto at the beginning was a bit more like edgy and like people are like, oh, it's all dodgy. So it was in a way a bit more expected. But now that, it's come to the mainstream, you have big banks and people being taken seriously. SBF was a big player in Washington, big donor in campaigns. He had like a conference where he had Bill Clinton on stage. Sam Bankman-Fried was very much in the public eye. He has a big influence in Washington. He was donating massively to campaigns. And, he had Bill Clinton on stage at his in a conference where he was sitting next to Bill Clinton. So, he's kind of a public figure. So we've gone from like dodgy crypto anarchists collapsing, which is like, oh, that's their problem, to like someone in the, public eye. So it is very much more impactful, I think.
More on the Binance FTX drama with Anna Irrera coming up right after the break. I want to go back to Binance for a while. So if we recap this week for Binance, basically what's happened is here. CZ on Sunday goes out and tweets, I'm going to sell our FTT tokens because of recent revelations. And then, steps back, chaos unfolds, FTX gets swept away. They get an offer from SBF by us, basically. They get a full look at SBF's, presumably they get a look at FTX's books. And then they take a close look and they see something they don't like. They turn around, walk away, and they now are left with basically full insight into the workings of a competitor, presumably, and that competitor might no longer be around. Is that sort of a fair summary of event? Where does this leave Binance?
Of course, if Bitcoin crashes, then that's not great for anyone. But as I said, there's been exchange collapses for years. And what we've seen is like some players have emerged in a more stronger position. And Binance has been around for quite some time now. And they're quite aggressive. So I'm thinking they might be taking advantage of the situation and they might see, inflows go up. And, it leaves them in a potentially stronger position, although, of course, that depends on what sort of happens to crypto in general. I don't think they had big dealings with, like Wall Street. So if Wall Street gets a bit scared by what's happened, I don't know if that impacts them. But for sure, now one of the biggest retail trading platforms is gone. And so people have to go somewhere else, right? I mean, I can't imagine many crypto traders or people that have traded for a while deciding all of a sudden to sell all of it at a low. That would be, it would be surprising. It might happen, but, they'll have to move their crypto somewhere. Some of it might go in cold storage, but if they want to continue to trading and operate, they'll have to move on another platform.
And is it reasonable to think in this sort of, with this chapter not behind us, we're very much still in the midst of it, but with what's played out over this week, is it reasonable to think that institutional investors who were thinking about getting into crypto might just take a look at this and go, wait a minute, I'm not so sure anymore. I mean, because that was always going to be the sort of what crypto needed after the scandals we've had this year, like more institutional participation. Huh?
So I think there's two interesting things going on. We've seen cryptocurrency firms saying they're having more institutional interest, so institutions going on those platforms. But we've also seen institutions building their own infrastructure and platforms. So the issue is perhaps not whether the asset class is valuable, it's whether the people that are running the asset class are valuable, right? Do we trust the centralized crypto exchanges? Do we trust the big players in crypto? Is a different question, perhaps, do we think that Bitcoin has any value as an asset? Because you could separate the two and say, well, we do still think that there's potential. We'll just set up our own exchanges. We'll do our own thing. We have our own, there are many banks that have their own custody arms, and that will probably make them feel a bit safer, because imagine if a crypto custodian collapses, that's really bad. But, now you have someone like Bank of New York Mellon, who's been custodying assets, many other types of assets for a while. That might make people feel safer. It doesn't necessarily mean that banks haven't had their own issues in the past. But, maybe if they think we're going to build our own infrastructure, we might still be doing things. But it will definitely be really interesting to see what they do. I'm thinking FTX, they were also backed by a pension fund, and Celsius too. So, I don't know how many other pension funds will take stakes in crypto firms going forward, imminently. There's got to be tougher questions being asked by the people behind those funds, right? Or the stakeholders. I think it was a teacher's pension fund from Canada. Again, as we've said before, what strikes in this crisis is the impact it's having on all sorts of people. It's no longer just, crypto fanatics losing their money. It's potentially teachers losing their pensions. I'm not saying this is what's going to happen here, because I don't think they invested all of it in FTX, but, there were institutions that had come in for sure. And, what if some of them got burned?
All right. Thank you, Anna. You can follow this story and all of Anna's reporting on the Bloomberg terminal, on Bloomberg.com, and on Twitter. Anna is at Anna Irrera, or ANNAIRRERA.
On the next episode of Bloomberg Crypto, there are a lot of ways that the crypto industry seems to be unlike any other. One of the big ones is its tolerance for losing spectacular amounts of money to hacks, scams, and exploits. We'll be talking about the latest attacks on DeFi and how they're affecting trust in the overall ecosystem. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net, or find us on Twitter. We're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.